Hello students, welcome you all for the online session on corporate accounting subject of third semester BCom, Bengaluru City University. The title of the chapter is Valuation of Goodwill and Shares. In the previous sessions, we have discussed the various methods of valuation of goodwill, and we have also worked out the problems on average profits method, super profits method, capitalization of profits method, and annuity method. In this session, we will work out some problems on the valuation of goodwill under all the methods. In this illustration, the net profits of a business after providing for taxation for the past 5 years are 80,000, 85,000, 92,000, 1,05,000 and 1,08,000. The capital employed in the business is rupees 8 lakhs. The normal rate of return expected in this type of business is 10%. It is expected that the company will be able to maintain its super profits for the next 5 years. Calculate the value of goodwill on the basis of 5 years purchase of super profits method, annuity method taking the present value of annuity of rupee 1 for 5 years at 10% as 3.78 and capitalization of super profit method. So in order to calculate the value of goodwill under all the methods, first we need to ascertain the value of super profits. So for that, first we need to calculate the weighted average profits. So since there is an increasing trend in profits, the weighted average profits method is to be followed for the calculation of average profits. Here, there are 5 years profits that are given in the problem. Therefore, first we have to take the profits for the last 5 years, then the appropriate weights will be 1, 2, 3, 4 and 5. And the product, it is the sum of profits multiplied by weights. That is, in the first year 80,000 into 1, 80,000. In the second year 85,000 into 2, 1,70,000. In the third year 92,000 into 3, 2,76,000. In the fourth year 1,05,000 into 4, 4,20,000. And in the fifth year 1,18,000 into 5, 5,90,000. Therefore, the total weights will be 15 and the total product will be 15,36,000. Now for the calculation of weighted average profit, the formula to be used is total product divided by total weights. That is 15,36,000 divided by 5, that is 1,02,400. Next we have to calculate the normal profits. For the calculation of normal profit, the formula is capital employed multiplied by normal rate of return. So both the values are given in the problem. Let us substitute the values here. Capital employed as given in the problem is rupees 8 lakhs into normal rate of return is 10%. That comes to 80,000. Therefore, the value of super profit will be weighted average profits minus normal profits. That is 1,02,400 minus 80,000, 22,400. With this, we can calculate the value of goodwill. So first, under super profit method, the formula for the calculation of value of goodwill is super profits multiplied by number of years purchase, that is 22,400 multiplied by 5, 1,12,000. Under annuity method, the formula for the calculation of value of goodwill is super profit multiplied by annuity, that is 22,000 multiplied by 3.78, that is 84,672 rupees. Next, under capitalization of super profits method, for the calculation of value of goodwill, the formula is super profits divided by normal rate of return multiplied by 100. That is 22,400 divided by 10 into 100. So the value of goodwill comes to 2,24,000. Now let's move on to another illustration. Here, the balance sheet of Swapna Limited for the year ended 31st March 2020 is given to you. On the liability side, you have 8%, 5,000 preference shares of rupees 10 each, 50,000, 10,000 equity shares of rupees 10 each, 1 lakh, reserves including provision for taxation rupees 10,000, 1 lakh, 8% debentures 50,000 and creditors 25,000. On the asset side, you have goodwill 10,000, fixed assets 1,80,000, investments 20,000, that is 5% government loan, current assets 1 lakh, preliminary expenses 10,000, discount on debentures 5,000. And the total of the balance sheet is 3,25,000. The average profits of the company after deducting interest on debentures and taxes is rupees 31,000. The market value of the machinery included in the fixed assets is 5,000 more. Expected rate of return is 10%. Evaluate the goodwill of the company at 5 times of the super profits. So here, coming to the solution part, in the first step, we have to calculate the adjusted average profits. So average profits of the company as per the problem is rupees 31,000, and we have an adjustment for non-operating income, that is interest on government loan on rupees 20,000, 5%, 1,000 rupees. So the balance of rupees 30,000 should be treated as adjusted average profits. In the next step, we have to calculate average capital employed. For that, first we have to take market value of assets. In that, fixed assets book value is 1,80,000, and in the adjustment it is given that the machinery value is rupees 5,000 more than the book value. So we have to add that value here, that comes to 1,85,000, and current assets 1 lakh. So we should not take the fictitious assets like the preliminary expenses and discount on debentures. From that we have to deduct the liabilities. That includes provision for taxation 10,000, 8% debentures 50,000, creditors 25,000, total 85,000. So the remaining balance of rupees 2 lakhs should be considered as closing capital employed. From that we have to deduct half of current year's profit, that is 30,000 into 1 by 2, 15,000. Therefore, the remaining balance of rupees 1,85,000 can be treated as average capital employed. In the next step, we have to calculate the normal profits. For the calculation of normal profits, the formula is average capital employed multiplied by normal rate of return. Here, 1,85,000 into 10%, that comes to 18,500. In the next step, we have to calculate the super profits, and the formula is adjusted average profits minus normal profits. That is 30,000 minus 18,500, rupees 11,500 is the value of super profits. And finally, we can compute the value of goodwill, and the formula for that is super profits into number of years purchase. So it is given that 5 years purchase of super profits, therefore 11,500 into 5, that comes to 57,500. It is the value of goodwill. Thank you, students.